Hi, everyone. Today is Wednesday, May the 7th. FOMC week continues. We begin by looking at the ES, the E-mini S&P Futures, looking at that Globex candlestick. Look at how wide it is. An opening Globex candlestick that big signals a high-risk environment. So we're a little bit hands-off. Now, here's the thing. We've got... The level to watch is the opening candlestick from April 30th. That number is 5640. We played around with it all day yesterday. It really was an inflection point so many times during the course of the day. So if you want to play this range, 5640 needs to hold for long action formation with higher likelihood of long expansion into 5860 and the 2-day implied vol move, which is 5694. What do we have in terms of trend? Butkus. 50 down to flat, 14, slightly up. Look at the range. This is what we're actually sitting in, right? A very big range. We're still making lower highs and lower lows. So this is a very dangerous environment. It is a two-way tape in my estimation. All right, I can confirm that in general by a downward sloping momentum indicator, but it's still above zero, right? So it says, hey, trying to find support here. What can we do? If we're taking a look at the 1 hour and we really want to try and get granular, here we have a swing low from our rotation to a swing high. We're pulling back into a higher low. Could we have a higher high? Potentially, but that would be against the broadening trend. We have a broadening wedge. Crepola. All right. So what I would like to see is a blow off top. Look for a short around 57.20. Potentially a short around 57.10, 57.05. Actually, I like 57.05. It could come in and top tick here and then reject. We're going to be in great shape. Listen, you use the hourly formations and the 4-hour formations to give you relative trend, and then you collapse down into the 15 and 5-minute and then look for a market structure break. What does that mean? We lose that swing low and retest, gives us the lower edge down. And because the market's fractal, the same formations that you see on bigger time frames appear in smaller time frames, but the bigger ones give you direction better. So on the upside walkthrough, my thought is a deep dip down, going to find buyers. That number could be 55.76, that's the weekly implied volatility, or it could stop right near that opening tick, which would give us another bottoming event, right? That's 56.07. So long action at the deep edges and short action at the big spikes. And if you engage today inside of that, it's going to be added risk. So manage yourself wisely. Me? I'm going to take time to study today. I'm going to be hands off. I'm not taking any trades in this kind of structure unless I get to my very top edges, 57.24 or 57.05. All right. Bottom edges again, 55.94, 55.76. Applied vol move here on the lower edges. 55.52. That doesn't look right. Hang on a second. 57. Oh, no, that's right. Yeah, that's crazy. And that's because this opening range is so wide. So everybody that shorted the puts last night before the close of the day, they shorted the puts thinking this was going to be a bottoming. Those puts are in fantastic shape this morning. They'll be able to cover them for a really nice profit. Let's go to the NQ. All right, the E-mini NAS. I'm going to remove that text. The E-mini NAS NASDAQ showing the same thing, extremely wide range, potential bottoming, still lower highs and lower lows, messy moving averages, cross current of formations. What do we have? Opening range formation. Yeah, we've got, let's duplicate this. Inside of that range, we've got 19,937. If you want to play this, that would be the area that would need to hold. Otherwise, we're going to the bottom of the box. Bottom of the box, that's 19,799.50. Top of the box, 20,133. Where would I take a trade? A blow off top, 20,203 for the short. 2-day implied move is all the way up here at 20,370. It's already hitting the implied vol move right now as we speak, 20,030. If we lose that edge, we could see a pretty nice short. Momentum is down. It's just crossed below zero, mildly. But underneath here, we've got these higher lows. Any man's game here. Deep dips. Going to make for long action formation. Big spikes. Going to make for short action formation. And of course, those edges, as I mentioned, 20,133, 20,200 for the failed resistance zone. And on the bottom, we have 19,589 to 19,573, maybe even 19,500. It really is going to be any man's game. Now, I want to stop for a second and talk to the folks who see a move, are intraday traders, and they go, oh my gosh, I can't look at, she's talking about 500 points potentially. I can't sit by and not take this trade. Listen, that's just as valid as anything else that you might want to say. The key assessment is, can you handle the risk? And can you handle the chop that says, hey, you might be right to go long here, but if it moves 200 points to the south, or let's do it this way, if it moves 40 points to the south and then begins to bounce because we're in some kind of compression space, can you manage the 40 points down if you go long? If you take the short and you do it, can you manage the 70 points to go up? If you can do that, and you are okay with going back and forth in a slosh formation to get yourself green at the end of the day, have at it. Me, because I really try to systematically break down every trade that I take, I don't want to have 50 trades to go over at the end of the day. I simply am not going to do it. I would rather read, okay, or exercise, or eat, anything besides that. All right, let's go to the YM. Same storyboard. Bottom edge of the opening range for the Dow, the E-mini Dow Futures, is 40,800. Top end, 41,388. Could we have ourselves a formation that we could potentially trade? Yeah, but I don't want to do it. I got a flat 50, an upward 14, a flat to downward sloping momentum indicator. It's telling me the low edges are going to find buyers. So I might try something at 40,800, but that's going to be my only trade. If it loses it, I'm out. I'll wait for it to recapture it or come all the way down to 40,400. If I'm up here thinking about a short, 41,340, I'll take a look at that. If it stops me out, I'll wait until it does another topping formation and try to short it again. I think this thing is in a big fat range. It looks like garbage, flaming garbage, okay? Micro Bitcoin, same sort of thing. Wide opening ranges like this open up risk profiles. Now, why is this risk profile present? All right, very steep upward 14, very far away from the 50, right? A couple of days we talked about it, wide opening range, right? This is actually filled in the gap You can see the gap is getting filled in right there. But we talked about this. A wide opening range gives us an opportunity to say, okay, if we reject it out of hand, it's in great shape. But the thought process was, wait a second, we got to do some mean reversion to the 50. And guess what? It took us 2 days, but we've done it. I think it's going to do the same thing here. So where might you want to short this? 2-day implied move is, we breached it in the overnight, 17,982. Absolutely insane. What does that say? Who knows? But I would like to see either a topping formation or a complete break of structure to lose 96,595 to get into the 50 simple moving average. That's my thought. Deep dips down near 94,000 and maybe 94,500. That gives me an area that says, all right, we had accumulation. This is distribution at a profit. People call this markup. And then, if it loses it, like here, it is liquidation, or I like to call it, distribution at a discount. It's all the same. We're moving inventory around. Right now, tighter moving averages are holding upside pressure. So trying to short here, you have the wind at your face, right? You want the wind at your back. And so it's got to break structure before that happens. Let's go to oil. So, huge move in oil. Could have to do with Iran. Pretty messy. Also, we got this, I don't know if it's a skirmish. I guess it's a skirmish right now with India and Pakistan. There's so much going on in the world. Sometimes you just want a blanket. All right. So taking a look at oil, its opening range is fairly wide. This chart overall has been in volatility compression. It's grinding upward. Look at the trend. 14, simple moving average, up. 50, up. Momentum, down. That means they're trying to find support. So where's a nice trade today? Well, frankly, I'd like to see it come back into 58.48 or maybe even the implied vol move of 58.16. If it does that, going to be a pretty nice buying opportunity. However, it might not allow us that. We could move right back up into the 60.23. Yesterday, I noted, listen, 60.25 is the weekly implied volatility move. In the overnight, boom, target. What does this reiterate? This reiterates that there are so many known unknowns that active market participants are leaning on statistical motion to drive their pricing and where they're going to get in and where they're going to get out. Implied volatility is running the show right now in most of these instruments. I believe that Bitcoin had underpriced its volatility, but it is on the rise, and so they are trying to get that clip. As the implied volatility rises, it's going to compress again, and so probably going to get back into some kind of tightening formation in Bitcoin. But back to oil here. Low edge of the range, 58.98. High edge of the range, 59.70-ish. Right? Are we making higher lows and higher highs? Yes, that means the dips are buy zones. Can we find an opening formation that matches the edge of where we sit right now? In recent days, no. So we could go all the way to the bottom of that edge before we move forward. Let's take a look at gold. I think gold is in a blow-off top, right? If it's not a blow-off top and it continues to rise, we're going to get some currency information that tells us something is breaking, right? I don't know what it is, but something's breaking. Other than that, this could be easily commodity technical advisors and hedge fund trend following formations that expected price action to rotate over, went short ahead of it, and had to buy to cover. Okay, so that's what's going on there. If it holds the 50 and continues to rise, we've got ourselves a 50 simple moving average, that is, and it continues to rise, we've we've got ourselves some kind of undercurrent that's a big fat mess. What is trend? 50 is up, 14 is up to flat. That means mean reversion. So it gives us a target of $3,376, thereabouts. It's hit that twice, failing one time and then recapturing. That's why the break of the line is not important, but how it resolves around the line is. Okay? But that's already the 3-day implied volatility move. So we could see some massive motion here in gold today. Opening range, the weekly implied vol move was $3,425. We sat there for about 3 hours and then went off to the races, broke out, and then immediately collapsed. This tells me that we actually could easily be in a blow-off top. That means the bounces into 34.25, open up a short, and then we maybe chop around this 33.76 area. I suspect that, we've got maybe 33.40. Deanna Angelo, who does the Euro Trade event for Top Step TV, was talking about she saw 3,200 being a really fair bounce level. I thought it was much lower. I thought it was $300 before. She was spot on. Got to give her props. Well, mostly because she's awesome. But outside of that, that's the storyboard. Okay, so you want to short it? Have at it. I am going to wait for a bounce that fails before I go short in gold. There's a lot of upside pressure here, and the chart is sitting in a formation. See how much this looks like this, right? See these formations? That gave us a bounce zone right back up. So that's what we'll be watching. Let's take a look at SPY. Opening range, fairly tight, right? $562.60, $562.60. Above that zone, we head to resistance, right? You might go, seriously, Emery, that's all you got for me? Listen, what is the trend? Lower highs, lower lows. What is the slope of the 50? It's flat. What is the slope of the 14? It's up, but it's got, a hairpin curve on it from overnight trading, right? That's weird that is a 6 o'clock candlestick. I need to think about this. I don't know if these guys have moved to trading in those pre-market, but the daily open event doesn't really start until 4 a.m. We're going to leave that opening range right there for the time being. Market's going to be very choppy today. They're going to sit in ranges for a hot minute and just see what's going on. I don't think the Fed's going to do anything today, but it'll be interesting to see what he says. So we're caught in this range. If we wait for the break, we've got the entire candlestick that printed at 6 p.m. Eastern time yesterday that we could walk through. Look at this. You want to trade this direction? You know what? That's up to you. If you want to do that, it's completely up to you. Here's the opening tick. That's 560. That's from yesterday. I'll clone it again so you can see. We've got flaming hot garbage here. So deep dips. The implied vol move is 566. So deep dips into that region could be a nice buy. Watch your chains. They're going to get super noisy and the spreads are going to widen if it comes down there, if you're playing the options game. All right. Up at the top, the implied vol move is 567. That would be a market structure break if it goes above that area and then pulls back and holds. So I don't see anything there. Finally, the Qs just had a down wick. I don't know if we just had some news, but fairly tight opening range. Bottom, $483 or so. Top, $485 or so. Deep dips, going to give us buy zones. Big spikes, likely to give us sell zones. Why? Trend is lower highs and lower lows, right? It is what it is. Unfortunately, we're also building a flag pattern, right? So in this little space, we've got higher lows, and we just breached a higher high. So is this a flag that says we have downside motion? That's my thought. But I'm telling you, I don't like these trades unless we're on the edges. I want to stay out of this garbage. No cigarro. All right, that's it for me, folks. You take care of yourselves. Light and tight if you're trading this noise. Let it come down into these edges where traders have said, listen, I've accumulated here. I'm going to distribute at a discount. That's where I'm going to find my cheap value events. Or I've accumulated here and I'm going to distribute on the upper edges of the formation. I do not expect to see upside motion today. It's just not in the game. But anything can happen. So we'll see. Take care, everyone. I'll see you on the streams.